Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand it tomorrow. And today, we're taking a look at crude oil. Now, crude oil just rolled over today, and we had a little bit of an interesting scenario. We opened up gap down, but just barely inside of yesterday. So right inside of yesterday's price action. They tried to follow it through, but ultimately there just wasn't much value, not much force behind that move, and the market failed and popped back up. Now, that failure off of the prior low of day isn't necessarily enough to just go crazy, jump in, and, slam the buy everything button. We need a little more proof than that. So when we're looking for consecutive follow-through or consistent follow-through of any kind, we want to see the sellers keep trying, and we want to see them start failing, right? We want to get the sellers kind of stuck in terms of catching that bigger breakout, right? The moves generally happen a lot faster when one side is stuck and forced out, right? Rather than them just kind of casually exiting when they can. We want it to be fast. So when we're looking at this move up, we want to see a little bit more information. The sellers try coming in here, and at one point this was a very big bear candle down, but then it failed all the way back up, and look how this thing closed. Just terrible looking bear candle. So what that basically tells us is a lot of sellers probably took that first candle short on the day, and they tried to get back out at break even, and they missed it. So because of that, they missed their chance to get out of break even. We can see that there is no value. The market's not seeing any value in this rally or this drop lower, which means that the buyers are still interested, and obviously, given the wick on the bottom, they're picking up the dips. So we're looking for those sellers to feel trapped. And when a candle closes looking like this, they feel trapped, right? So what do we know about that? Well, they're probably going to exit above the high of that, or maybe they'll hang out to see what happens. If it breaks out above that, maybe they'll try to exit afterward. But either way, it's very likely that the sellers are going to start exiting above these candles. Now, when we start seeing them exit, we get this big pop higher, this big bull candle right here, and that shows us, yeah, the sellers probably feel trapped. They probably feel like, oh man, they sold at the perfect wrong time, right? And I think we've all been there before, and we know how that feels. And when they feel like they're backed in a corner, they're going to start exiting, and that's exactly what happened. Quick little snap higher. Now, because of this move up, you see how tight of a bull channel this is? This isn't the kind of environment that you want to be buying high hoping it goes higher. Buying high, you're buying smack into the resistance. So we need to wait for a little bit more of a pullback. Let them pull down, try to get a better price or buy away from the highs, and then look to jump on in. And that's going to give you the best opportunity to make some capital on the move. That's what we get. We get a dip back down, they try to push back lower again, it doesn't go very far at all, and starts popping back higher with a beautiful bull signal right there, and that allows the buyers to punch the market right back up again and drive the sellers out. And that's that final fear push, right? That's that push that we want to see. So with that push kind of out of the way, now we're all hands on deck for the upside. We want to see good continuation of the upside, get the buyers going and keep them going, right? We want to see the buyers follow this up. The buyers follow the beautiful bull candle up with a very strong bull bar higher. That's what you want to see, right? That's that good continuation that you want to see the buyers following through with. The bears try again. Ultimately, we know that every single time they've tried that, it's been a failure. Doesn't make any sense for the sellers to try to keep trying, but they will anyway. And that turns around into a strong bull bar right back around for another buying opportunity to spike the market higher. Now that most recent spike right here, that was a very aggressive spike up. You can see, looking at these moves up, it's just kind of going, and then boom, it slams higher like that. That's a good sign of the potential of exhaustion, right? The buyers put too much emphasis too aggressively, and that's going to cause the market to stall a little bit. So now we know the buyers probably aren't going to be buying way up here. Doesn't make any sense to. We're going to wait for them to pull back. We get a huge bear bar down, completely out of the norm from what we've seen before. Really weak, really weak, really weak, really small. This is the biggest, baddest looking bear candle they've had all day, right? Well, chances are it's not going to get very far considering the bullish trend, and that gave the buyers an opportunity to buy into that move, assuming that it's going to fail and spike the move right back up towards the high. So just a great day overall of trading, even with all this stuff going on, even with all the hubbub going on in the White House with all of the speeches and impeachment and blah blah blah. All of that stuff all aside, it was still a very good day in terms of technicals and psychology, and just overall, I can't really ask for much more than that. So that's going to do it for today. Hopefully you learned something. Hopefully you found it useful, maybe a little bit interesting and entertaining, and we'll see you next time.